Good morning. Good morning. How's everybody doing? Hey, Marcus, what's up? Well, I told you guys at the close yesterday, I said look for 75.30 on the way down for a backfill. And we hit the 32s and stalled for a little bit. Now we're down in 22s. Next place I'm looking for buying would be just right here in this 75.22 area, 20 to 22. And I'll show you one just on the minute chart. I left the balance zones from yesterday. So there's yesterday's balance. We've been at 8 times distribution. Now we didn't get up over, I only drew 4 of these. There should be 8. But we've been distributing, and now if you look at it, you can see just using the 1 minute chart, right? You can clearly see that all the inventory, even though overnight inventory is short, the shorter term inventory in the session, you can see how everybody's trapped long over 75.32 and the market's trying to find that bid. The reason I said that 75.20 areas, there were bids here before. So we'll stall here and then eventually come back into this position here. So if you're short, you can basically stay short. If we break this level, you can stay short lower. If we hit this and bounce, then be careful. Pretty simple, right? Okay. Very, very simple. None of this stuff is complex. And we keep it that way because execution is difficult. So you want to keep your mind clear when you're executing, which means you have a very simple business plan. You see on YouTube and you see, you know, on Twitter and stuff, you see people with like a 3 or 4 page business plan every day for trading. Like I've got a 4 page trade plan. That's going to be useless when you're actually executing. Unless you're a fund manager and you have a lot of money and you have a lot of time, and also if you have an executing trader, things are going to be a little bit easier. But if you're just a regular person sitting at home in your living room or your office, you can't execute a 3 page trade plan. It's impossible. You're not going to be able to do it. You're going to lose a lot of money and you're going to waste a lot of time. All right. So let's stop wasting time and losing money. That's what we're doing here. Now there's the old overnight high, which we had a little bit of. I just wanted to show you that's where we initially kind of slowed down and stopped. Now we're underneath it. And now we have single prints here, right? We have single prints to the downside. What that means is we have a chunk of people trapped above. This is supply. So these single prints that you're seeing here, those are supply prints. When you go up, right, we had single prints yesterday, you had them here. When you go up, they're a short position. When you're down, it's supply, right? Overhang supply. So what we're going to try and do is we're going to see if the market holds this 20 level. If it doesn't hold 20, your obvious next target is, guess what? Our favorite level, 75.11. So we have a couple of scenarios. One is that we go sideways here, move the point of control down, hold this level, and then move back up, or we drop down and do a look below and fail of 75.11. This would be my more preferable trade. Because I like to buy on a big flush because you get the best deal, right? The bigger the flush, the better the deal. Right? We're traders. We're supposed to want to get a good deal. Oh, and on the old half-hour candle chart, let's drag that over. So if you don't have market profile, don't worry. You can use this. It'll tell you the same thing. See that 75.32? Do you see all the inventory above it? Now, I've done videos on inventory. I really hope you guys watch them because you can see there's inventory here, which is a distribution. You have inventory here, which is an accumulation, right? So accumulation into distribution, put it on sale, accumulate into distribution. Oh, look, you put it on sale, it brought in buyers. We can sell at higher price. Now we are discounting price, right? Use these levels, they'll work pretty nice, right? Our low is 21, my level is 21 and 3/4, right? They're off by a couple of ticks. 75, 10 and a half, 11, that'll work nicely on the way down. So right now all we do is wait and see what London does when it opens. Yeah, you don't have to have a market profile. Hey Juan, hola. So now what I'm looking for is I'm looking for the cost basis of the overnight, which is up at 74, 75.41 half. I would like that to move down here to show good accumulation. Then we can take it and go back and sell it up here again, depending on the order flow, right? That's what we're hoping for anyway. And we got sellers right at 75.30. We'll see, we get a little back and forth going here. Maybe we build out a new little balance zone between maybe 21 and 29. Let's see. There's no trade for you right now. What you want to do is you want to wait at least 4 minutes until London opens to confirm that low before you start position sizing. See, the most common mistake traders make is getting in too early, right? The theory is to build a long position here to go sell it back here. But you want to wait at least until London opens so you can see whether there's no use building a position here and then having to sell it for a loss, right? If we get stopped out. So let's see if that low holds, right? Now, generally, there won't be any huge buy orders coming in right now where you're going to miss a move, right? So those of you traders who have FOMO, you should understand that this is a situation where FOMO does not exist because you're not missing out on anything, right? So it's like waiting for somebody to clean a toilet. You're not missing out, right? You're not missing out on anything. If you can visualize what's going on in the business, it's going to really help you basically stop losing money, right? In trading, when you stop losing money, a magical thing happens. When you stop losing lots of money every day, something really amazing happens. You start understanding the business and you start making good business decisions because, you know, you're not losing money, which means, you've kind of turned a corner, right? So the next thing now is to make money, right? And making money in this business, it's not easy, right? It's not easy. It is simple, but it's definitely not easy. What we need to do is you need to work on trades that will make you money. You need a go-to, as the kids say, ride or die, right? You guys need those ride or die trades. One trade that pays your bills, that you know it works. You can count on that trade, right? Oh, I've got something for you guys. One of the benefits in social media, this is hilarious. You're going to love this. When you guys are trading, let me see if I can bring up this picture. You need to channel this guy. This is your spiritual trading advisor. Okay? This guy was so cheap, he was a billionaire who put a payphone in his mansion to keep people from making long distance phone calls. You need to be this cheap. There you go. I want you guys to start thinking about your trades. This week is a really good week to start working on being really mindful of where you trade, how you do business, where you put your stop, the business reason for your trade, all of that stuff. Now, London's opening, watch that low. Remember, we were talking 75.20, we're here now. And that is a poor low. I'm kind of expecting it to break. If it doesn't break, we'll rotate back up to 24. You guys awake? Testing? Good. I can't post it in YouTube. It's in the trading room, Grain Monk. Exactly, right? It's posted in the Discord, right? So it was just a picture of John Paul Getty. And the story is, he was the oil tycoon billionaire. And he was so cheap, he had a payphone in his mansion. It's not a sell off, it's just an inventory adjustment. This is our gardens, this is what we call a backfill. Everybody got short yesterday into this distribution. Nighttime allows them to cover some of their short with a little bit of dignity. That's all. It's not a big sell off. It looks like a big sell off because our ranges are huge in this market these days, right? We have big ranges in this market. So we are still inside yesterday's cost basis, right? You know, yeah, it's why it's slow. I'll tell you why it's slow, right? The market is slow backfilling because there were a ton of trap shorts yesterday who were bid to cover. And there was no reason to reduce price quickly. That's why the selling was kind of drip, 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 drip. When we finally took out this level, the selling accelerated. There we go. Come on down. Come down to 75.11. Come down to flavor country. I have a bid waiting. I have a bid waiting, right? Keep selling it. If you're short, that's beautiful, right? If you're short, you can stay short as long as the sellers keep moving lower, right? They were here, they're here, they're here. Now they've moved down here. See? It's a beautiful thing. I'm not short because I was actually on a phone call earlier and I didn't even have my trading software open, right? So London usually opens and kind of likes to pop lower. They love doing that. Get some cheap inventory, right? Now we're in this area between 10 and 21. There's a bit of traffic. There's a little bit of traffic. Let's see. It's going to slow, right? Business is slower on backfill nights when there's a lot of traders trapped short. This is short covering. This is short covering, right? And then it pops and the sellers sell into it. That's what you're looking for. If it moves back up, you're looking to see, they sold right where we thought they would, right? We marked it, they got there, it sold. If you're short, you can stay short. If it pulls over 21, 22, then you know your next seller is at 23 and your next seller is just under 24 and 3/4. If you lose these sellers and you're a short seller, then you cover. But if these sellers engage and push price down, you can stay short. It's really simple, right? Like a piñata, exactly. That was our piñata low, right? When we took this low here, right, all the candy started to fall out, right? Beautiful. Yeah, I want you guys to be cheap when you're trading, right? Don't just throw your money away, okay? So right now we are looking for the bid, right? No idea where the hell it is, but we're looking. Hey, Trademaker, what's up? See how slow it is? The thing is, the machines that control the inventory, right? The algos that are written for the wholesalers, they'll see bids. And when they see bids, they stop selling and they try and move price up. But if there's competition, they'll keep reducing price. See? Here, here. The top of the candles will tell you. That's why you guys get a trend line, right? For you trend line folks, there's your trend line. The trend is the trend of the offer moving lower, or the trend is the trend of the offer moving higher. But they never tell you that, do they? In any trading education, has anyone ever told you trend line is the trend of the offer? Have you guys heard that anywhere else? Let me know because that would be a good trading educator, right? A lot of people talk about trend lines, right? But they should tell you the trend line moving down is the offer moving down consistently because the market's being put on sale. Trend up means that the sellers see buyers and they're raising price. That's what's going on. That's what's creating the trend, right? And then if it's not trend, it's back and forth like this. And then it'll go trend into distribution or it'll go into more accumulation, right? This is a trend of prices being reduced. You can see offer moves from there to there to there. You can stay short. So if you understand that, now you understand how to trade a trend because you know what to look for. I want to make it simple for you guys. It should be simple. It should be simple because execution, oh my God, execution is difficult, right? We can all agree that execution is, as my ex-mother-in-law would say, execution is a mother trucker. That was her word, so she wouldn't swear. She would say mother trucker, right? Execution is difficult, man, I tell you. Because just as soon as you start executing well, the agenda changes, the order flow changes, and then we have to adapt. Most people don't even know that the agenda has changed, right? The agenda always changes at month end, at quarter end, at year end, and those things are kind of obvious. But what happens when the agenda changes from day to day or week to week, right? That's hard to spot. And that's why a lot of traders trade like a god one day, the next day they lose it all because they don't know how to adapt. They don't even know what to look for. So if you come into our trading room, we'll teach you all that. All right. The first thing you should do, if you don't understand what's going on, don't trade. Right? Don't put money at risk unless you have a clear understanding of what the hell's going on. Now that should be an obvious thing, but it's not. About 98% of people out there who are putting them on trades on have absolutely no idea why they're taking the trade. It's either they learned it in a book or somebody told them to do it. And I think that's a crime. Yeah, demo is like shooting in a training, at a range, right? The target doesn't shoot back, right? Just like hitting a punching bag is the same as trading on sim. But you still got to trade on sim to know your software, right? The demo is so you understand how to use your software so you're not fumbling around when you're trying to put trades in. Just like if you had a pilot who had never trained in a simulator, God help you when you hit turbulence because he's going to be, what the hell do I do now, right? Plane's upside down. Oops. So you got to know how to use your software, right? You got to know how to use your software. So you're not fumbling around, right? That's what the sim is for. The sim is that you get that mind body connection because until Elon puts that stupid chip in our head, we still have to physically move the mouse and click, right? Or whatever you guys use, hotkeys, hot pockets, whatever the hell you guys are using nowadays, right? How do you use top and bottom candle for trend continuation reversal? You use these levels, right? So right now we're trend down. We're trend down because all of these people who are long from last night and from this morning, they're all sort of casually puking out. So the thing is, this is a really good question because we're trend down in a small time frame. On a larger time frame, we're still inside yesterday's range. So it's really not a trend, it's just back and forth. It seems like a trend because these ranges are freaking massive, right? So that's that's the thing. We use these levels, right? If it's not like if it's a trend day, we would be really underneath yesterday's low and we would have taken this out, right? We are still in this back and forth accumulation area, right? Let me just zoom out a little bit. On a larger sense of things, right? And I'll talk about the trend in a second. Larger sense of things, if you check this out, all of this inventory long is trapped and they're all selling out, right? Now, currently, we are range bound. Exactly. We're in a new accumulation area. Exactly. And we do have a range, grain monk, right? That's basically our, I'd say, maybe here, maybe a little lower. I'll use this, also use that short position, right? We're just back and forth, right? Exactly, right? So our two options now is to, well, actually we have three. One is to do this, just go sideways until the end of the month, right? Or we break these lows, right? So what I do common is I use these levels, right? So if you were trading trend down here and then it looks below 75.11 and then pops back up, that for me on a longer term, the trend's over. The trend down is over because I'm using this level. And I'll do the same thing using the candles. See? Remember I said that we're going to try and stabilize somewhere here, right? That's the stability that's happening. So if you were long, say you went long 75.20, you know there's going to be a seller at 23. You know there's going to be a seller at 25. You know there's going to be a seller at 26. So put your sell orders out and make sure you get liquid, right? And that's what I'm talking about. The trend is now like the trend of the offer moving lower has been interrupted, right? See? Now the offer is lifting, which means the sell orders are done for now. We found some buying, right? So the first thing that happens is the short sellers come in and cover. Then wholesale builds a position on top. We start buying. And if enough people short, the dumb money shorts, if they short here and enough people get short under 26, we'll pop up to 32. Pretty cool. Same thing happens every single time because these markets haven't changed in thousands of years, right? They've just become more efficient with technology. Just like Amazon uses robots to deliver stuff or move its stuff around in the warehouse, the market uses algorithms to move inventory because it can do it cheaper, faster, and you don't have to bail algos out of jail at 3 in the morning like drunk market makers. So your legal fees running a brokerage firm are much cheaper using algos, right? Because they don't get drunk and take a swing at a cop at 3 o'clock in the morning and then you get arrested. Wholesale takes advantage of everyone, right? So a wholesaler's job is to buy and sell, to provide liquidity, right? What would be a perfect stop loss for me? What's the trade common on a long? Yeah, retail, we're just in the way, man. We're just food, right? We're just food. A nice light snack. Wholesale, what they're doing is they're moving size for clients. I need to move 1 million shares of a stock. I'll give the order to my executing trader. He'll farm that order out to Citadel. And in the old days, the Citadel trader would work that order, right? Okay, so say we're going long. Where do you want to go long? Say you're going long at 20. My stop would be, if I was going long at, let me see, right? If I was going long at 20 here, my stop would be here, structurally, just under 19. Okay, you're going along at 22? 22 long? My stop would be here, under 21. And if I was long 22, I would be a seller at 23, 24, 25, 26, because I know there's going to be a seller there. So if I was long 22, I'd be out of my position by now. Long 22, my last sale would probably be 25. Long 22, out 25. And if it takes the 26s, great, it can go without me. If you got more size, you're going to have your next seller here, just under 27. If it hits your stop, it means that they ran out of buyers and they're putting it on sale. So if you're long 22, right, and your stop is here, right, so you get stopped out, then you know it's probably going to go back and forth in this area and it needs more time to clean up all this liquidating inventory. Good questions, right? That's a good question. All our stops are structural, which means the business reason for that trade that you're buying 22 is that you believe that you can buy 22 to sell 23, 4, 5, right? So if somebody comes and offers it lower than 22, if somebody puts it on sale at 2019, then the inventory that you bought to sell is mispriced and you need to blow out of your inventory. That's why you have a stop. A stop doesn't mean you're wrong. It means that your inventory is mispriced. That's why the concept of inventory, it's actually not a concept, it's a business fact, right? The business fact of inventory and cost basis are everything because it's a market, right? Hopefully that's helpful. What are the signs that the bid is present? Another great question. Man, it's like I'm paying this guy to ask the right questions this morning. The sign that the bid is present is that the offer will start moving higher, right? If you're executing this order over time, what would a healthy MA fee look like? I have no idea. I don't know. I'll have to research that question deck because I don't think in terms of MAE, MFE. Everything I'm really, really simple, right? What are signs that the bid is gone? The offer will lower. Watch this. Watch 75.24 and 3/4. There's a bid here. If that bid is gone, that offer will come. The red line will come and offer underneath, and the tops of the candles will start moving lower. Right? Single prints in market profile tell us if there's a short position or there's too much supply. That's it, right? Yeah, that whole MEA, MAE, thing is something I never got into because my thing is I buy a little at 22, I put my stop at 21, I sell it at 3, 4, 5, I'm done, right? Take 5 or 6 contracts, sell 2 at every handle up, right? I trade for income. So I'm not like one of these traders who agonizes over stats and value at risk because I'm naturally cheap because I was trained by savage old people who basically who taught me and instilled in me the fact that you don't lose money. Their businesses, that we have business expenses. Getting stopped out is a business expense, but we don't lose money as a whole, right? Because if you don't know what you're doing, you don't put money at risk, right? And where I grew up, in what I grew up in the market, is we are the liquidators. We have stock that we paid 0.0001 cent for. We're selling it at $5. So we really have a huge margin of error, right? If I sell it at 475 or 485, I don't care because we paid a hundredth or a tenth of a penny for it, right? Never use market orders. The only time you use a market order, oh, where's common? See, now we lost the bid at 24 and 3/4. See how the offer is here? Now there'll be a bid here. So if we offer underneath that, we've lost that bid. It's really simple. All you need is a candle chart, right? You don't need a DOM, you don't need a footprint. This is so simple and it's free, right? Don't use market orders. Market orders are for suckers, okay? The only time you use a market order is the flatten button. That's if you get into trouble and you need to get out fast, and that'll market you out. And you don't get to cry about your fill, right? I never use market orders, right? At what level? Here? What level are you talking about? Right now I'm looking for a bid right here, just around 21, right? I don't know if it's going to hold. Like, I mean, if I was short, say I saw a seller here and I shorted 24, stopped 25, 26. I'd put some bids in at 23. I'd put some bids in here at 22, and then I'd go and bid 21. If these bids get hit, great. If this one doesn't get hit, cover your short. There's a little bit of a bid there. See how the offer is lifting? See how we came down and we printed, and then the red line moved up. This is really good. Check it out. Watch the red line. The red line is the offer. It tells you everything you need to know. Now watch. There were sellers there before. Let's see if they sell again or if they move up to the top of this candle. You can really dissect order flow by looking at transactions. You see, the order book or the DOM, those are not transactions. Those are expressions of interest. This is actually transacted volume. So you know that there's a seller there, right? So had you been long, you know to go sell there, right? If the offer lowers and prints and does not stay, it means that they've seen buyers, right? So see how it lowered down here and then it raised? That's exactly what's going on. It found some buyers, and look, they they didn't have to sell underneath 22 half, so they started raising price. Nice, you took the 22 on the backfill. Beautiful, beautiful. Now you're cooking with gas. That's what I like to see. So another thing is we could have a new balance zone here, right? Maybe like a little back and forth like this. And you guys can just trade this, right? That's always a beautiful thing. Once you start seeing cost basis and things like that, your life will change. Your trading will get simpler. Things just get much less complicated, which is what we want. You don't want your trading to be complicated. Life is complicated, right? Keep your trading simple. What is a backfill? It's kind of like a little sale, right? So, Sergio, we got the cheap stuff, we take it up, and we ran out of buyers here, right? So you put it on sale, like when you're in Walmart and they go, "Attention Walmart shoppers, for the next 2 minutes, WD-40 is on sale 2 for 1. Buy one can, get one free." Boom, it brings in buyers. See? Does that make sense? All it is a little sale. Where the word comes from is you go up to create demand, right? You go back to fill in that demand with supply, right? That brings in buyers, which allows you to raise price. How do you identify the front side and the back side? Real simple. This is the front side, this is the back side. This is the front side, this is the back side. Front side, back side. Doesn't get much more simple than that. Simplify how you look at things. If you can simplify how you look at things, it'll make your life so much easier. Good questions, Common. Thank you guys. Have a wonderful trading morning. Stay out of trouble. If you want to learn how to trade in a no BS environment, no gobbledygook, no gibberish, simple common sense trades that everyone can understand, come visit us at tradingsyndicate.org. I'm vwaptrader1 on X. Thank you all for being with us. You guys in the room, I think you need to have some more coffee. YouTube, if not for YouTube, I would have shut down the session. Have a great morning, you guys. Get some coffee, okay? Thanks, folks. Have a great morning. Yes, there is a seller at 25. Beautiful. Now you guys see, right? You don't need any fancy software. Save your money. You know, be like Mr. Getty, right? You want to be cheap. Save your money. Have a great morning. See you guys in a bit. And remember, folks, 11 o'clock a.m. Eastern Time this morning in the room, we will have our execution class where we drill down on execution. Okay, I'll post the Zoom link in the room at 11 a.m. Eastern. My next YouTube session will be at 9:15 Eastern, 9:15 a.m. Thanks, folks. Have a great one. Bye for now.